Okay, day 9. So today is all about becoming what I've heard the term used, and I'm going to use it, and that is a programmatic buyer. And a programmatic buyer really means you have extreme clarity on the type of properties that you're looking at, the size of the properties, where you're looking, and you're able to communicate that to either sellers or brokers in the community of commercial real estate. And why that's so important is the more clarity you have, the more serious people are going to take you. If you just say, well, I'm looking for value add commercial real estate, or I want 7 cap properties, brokers are going to look at you and just realize that you're either unsophisticated, you're a rookie, and they won't take you seriously. But if you can go in and say, you know what, I'm looking for industrial properties between 20 and 50,000 square feet with some vacancy or a problem that I can fix, either under market rents, maybe vacancy, maybe it's got some extra space that I can expand on in Highfield and Manchester area with 18 to 24 foot clear ceiling, grade level doors. If it's got dock level, that's fine. And I'm looking for multi-bay warehouses, right? I don't want it to be just a single tenant. If you went in and told that to a broker, they're going to know that you're a player and you know what you're talking about. Now, it might not be easy for them to find, but when you give them that kind of box that you're trying to work within, they'll be able to go back to their database and either look for properties on market or maybe a pocket listing. And a pocket listing, which we'll get into in the future, is essentially where a broker knows a seller would sell to the right buyer if they're able to bring a buyer to the table. Okay, so it's not on market, but it's a relationship with a seller that may sell. So at the end of the day, so I'm going to give you kind of the big picture here, and that is there's many different ways to become a programmatic buyer. I'm going to give you 2 scenarios, one which requires a lot of research, and I would suggest that eventually you do that research. But I'm also practical, and that would require time and energy and an understanding of the market. And I think one of the best ways to streamline that is to follow what I call the smart money. And so by following the smart money, what that really means is you're looking for the biggest players in the market, people that have, 10 people on staff that are doing all that research, and then you can kind of piggyback off them. You're basically following what either the biggest developers or retailers or industrial players are doing and looking at what they've done, and then just going and looking in areas around it, like maybe a 1 or 2 mile radius, and just saying, okay, so that's center ice, that's like, that's where every retailer wants to be, or that's where that $500 million new development is coming in. And what is around it, property-wise, that has what I call the right things wrong with it, right? So you're in the right location because you're following the smart money, and you're looking for the right things wrong, right? So you're not looking for a functionally obsolete property. You don't want to buy a property or a building that doesn't have either access or proper access. Every property should have access, but it may have really challenging access, or maybe it doesn't have enough parking, or maybe the ceiling height isn't high enough, or there's some other kind of functional thing wrong with it. You don't want those type of properties. You're looking for a property that fundamentally works, but has some vacancy. Maybe it's got some deferred maintenance. I mean, no different than when people are out looking for residential houses. You're looking for owners that have not taken care of the property. And that's really somewhat what you're looking for in commercial real estate. There's some parallels, if you will. And the things that I generally look for will be vacancy, maybe excess land, below market rates. You're probably not going to know just looking at a property if it has below market rates, but if it has vacancy and maybe it has no for lease sign, that's an issue. If it does have a for lease sign, you can call up and just say, hey, I'm looking at this space at 123 Main Street. How big is the space and how much is it? And then eventually, as we get into how do you communicate with brokers, which we'll do probably in week 3 or 4, you'll be able to start asking a few more questions like, well, is the landlord going to put any tenant improvements in? What about any kind of free rent? And you don't want to get too deep because they're going to want to set up a meeting with you. You're just trying to get an understanding of the market and what is that landlord doing, or what are they not doing to attract tenants? And that's going to give you an idea. Now you can transition that call into, would the landlord consider selling? You know, I'm looking at investing in this area, and I like this property, I like the location, and you can just kind of float the question by. If it's a property manager, it might be the property manager for the landlord, well, likely would, or it may be the leasing agent, which is going to get a much higher return if they sell a property than just leasing 2,000 square feet of vacancy. So these are calls and conversations that, like I said, we'll get into in the future, but I just want to give you some ideas on how to think about this. So back to becoming a programmatic buyer. You've identified properties, you know the locations that you're looking in, and the reason that you've got this clarity, if you will, I probably should have mentioned this first, is get out a map, like a physical map of the city, and then just start circling the areas that are growing and places that you would like to invest in because you see a future there. And that's typically where new infrastructure is going, right? The city that you live in, if they're investing back into it, either into new roads, new transit, you know, they're expanding in and opening up more land. If they're putting money there, it's because they see a future there. And so it doesn't always have to be in Greenland or greenfield developments, which is like new developments. It could be in brownfield, which is infill developments. But the idea is you're looking for areas that you want to be in, and you're following the smart money. The homework for today is really just kind of going through the questions that I've got in terms of becoming a programmatic buyer. Like I said, probably the fastest way that you're going to do it is just to follow the smart money. If you're looking for retail, I mean, Whole Foods, Starbucks, big grocery stores, they do so much homework on the locations because they're really looking at rooftops and proximity and drive times, that even if all you did was just kind of look for some of those kind of major retailers, that's going to give you a very good understanding. On industrial, you're really looking at kind of access and proximity to airports or rail or transit. Sorry, not transit, but freeways. And I've got the details in the write-up. So this video is getting long. I want to end it by giving you one, I think, really good resource. And I literally just went online before making this video just to see how easy it was. And I'm going to give you the name of the company and then some ideas on what to search for. And that name is CoStar. So CoStar, I believe, is the parent company that owns like LoopNet and a bunch of other kind of commercial real estate related companies. And CoStar is probably like the premier research firm for commercial real estate. And so what I did right before I got on here was I searched CoStar vacancy rates for Calgary. I think that that's what I came up with. And the first search that came up was a PDF on the 2018 report for Canada. And I mean, like it literally took me 10 seconds to find it. And it's about 30 pages long, and it breaks down GDP, like it goes macro and then it goes down to the micro. And so if you're looking for a really good tool to find some of this information, and it's going to give you the high level, right? It's not going to break it down into sub-markets in your city, but it's going to give you enough data that when you start to look in the areas of, let's say Calgary or Vancouver, or Toronto or Seattle, or wherever you happen to be investing, you're going to have a framework for having those conversations. And then based on the homework you did yesterday and today, and you combine the two together, that's how you become a programmatic buyer. So hope that helps. Do the homework, comment below. I'll see you tomorrow.